So before I start, I need to know a couple things. Hi.
How are you?
All right, how are you? I know her. But she's the only person that I know in this group. Who's the oldest person in the group? Could you please raise your hand? And who's the youngest? I'm trying to get a more serious question. How many of you, so I think a lot of people here are customers, is that correct? You're traders. How many of you care about the floor? How many of you use the floor right now? Does anybody use the floor? And can I ask why?
Me personally?
Yeah.
I would prefer not to use the floor, but the Eurodollar options are not going screen-based probably anytime soon.
So there's no liquidity except
There's some liquidity on the screen. I wish it was on the screen,
Yeah.
but it's not there yet.
Similar reason. Sorry.
In the option PID, the prices are better than the screen, generally.
Aha, okay. Okay. All right, so I know the talk that was advertised, I forgot whether it was advertised, but I know it was about the future. Everybody wants to know about the future. And none of us know much about the future at all because we haven't been there. And so what we do, the lazy thing, I shouldn't say the lazy thing, it's like the logical thing is that we look in the past for things to extrapolate, or we look for patterns. I mean, if you think about it, what do you guys all do? You're all buried in the past. You're continually looking at patterns in past data in order to figure out what's going to happen next. So that's what we're going to do today, is I'm going to talk about the past. And what generated that is that I was a baby when I came to the CME. I'm sort of a baby. I'm a very old guy right now. So when I came to the CME, it was one of my second jobs out of grad school, and what existed then, and I'll give you the date. I came to the CME in 1979. At least 3/4 or half of you weren't even born then. So what happened between that time and now blew me away. And because of that, I'm an academic. I teach at IIT Stuart School of Business. And because of that, I collaborated with one of my former students who at that time was at Goldman Sachs. And I knew the business side of stuff. She really knew the technology side. So we wrote this book called From Pits to Bits. From Pits to Bits, the global transformation. I don't even know what it was. But it was a cool title.
She wrote the book.
She wrote the book. No, we actually did it together. So a lot of that, I mean, it got me thinking about things. I got really deeply into figuring out what was happening and why. So that's sort of what we're gonna be talking about. So what's wrong with that picture?
Too many people.
It's too old, too many people. So I'll tell you, when I was working at the exchange, it was the best place to have customers come to visit because you could show them a circus. I mean, who doesn't love going and seeing, and they would just stand there with, slack-jawed awe watching what these guys were doing. But this is inefficient, it's expensive, and unfortunately, stuff happens or did happen on the floor, there's not that much of a floor left now, that cost people money. And there were a lot of reasons that it wasn't really a good place to be. And in fact, I don't know if you guys remember this event, again, some of the people who are a little bit older, there was, the FBI actually wired people, put them on the floor of the exchanges to find out what was going on, and that was stimulated by the guy named Dwayne Andreas, who was CEO of
ADM.
ADM, thank you. Because he felt that he was getting cheated all the time with the fills that he was getting on the floor. So people got really frustrated with floor-based trading. And so I'm going to do a little contest right now. if anybody that can tell me what the very first fully electronic futures exchange was, I will give them this. Is that an iPhone?
It is an iPhone. It's an old one.
It's an old iPhone. So, yeah. Oh no, that's not. You can't. Jeff, right?
Yeah.
Anybody but Jeff can answer this, and Jeff can answer it if nobody else can.
Life.
Europe.
Life is a terrible example because that's an example of an exchange that was a dinosaur and almost disappeared because of it.
Europe.
Eurex is a great example, but it wasn't number one.
I thought it was global.
Globex, well, no, so what I'm saying is, what was the first fully electronic exchange? So Globex was just like putting a toe in the water initially.
Australia.
Australia's not a bad example.
Close.
A nearby
Singapore.
thing was number two. That's not, nobody's getting this. Okay, Jeff.
I would have said Eurex, but Bermuda. Is it
Yes, it's in Bermuda. You don't get it unless you name the exchange.
IP, is that? That's not.
You're saved. He doesn't get it. So that's absolutely right. So the very first exchange. Oh, this is what I meant to show you, and then you were going to guess where. And this, I don't have a pointer, but who would have believed that the very first electronic exchange would have been in Bermuda? And it was called INTEX. And the reason that well, in fact, I'll tell you why it was in Bermuda in a second. Let's just, so one of the things, this is like I'll give you a hint of what's about to happen. Almost all of the first electronic exchanges were new entities. It was not a matter of getting old exchanges to convert to electronic trading. These were upstart things, brand new, de novo kind of efforts. So, Bermuda, INTEX. So, this guy, I don't know, does anybody know Eugene Grummer? You know that name? Does anybody know Jay Peak? Anybody know Wallace Sparkman? That's not really Wallace Sparkman, but I just couldn't find a picture of Wallace Sparkman. So basically, Grummer ran the floor at the CME, or Board of Trade, I'm not sure which it was, and he was really frustrated with the fills that he was getting. And so he got together with this guy from Wall Street, and they needed money, so they went to the oil guy, and they put together this thing called INTEX, and it was basically an electronic trading system. They went to the CFTC to show them what it was about, and the CFTC loved it. They say, we would love for you to have a system like this, because one of the things that regulators cared about is really having a path,
Audit trail.
an audit trail that they could follow to make sure that people weren't trading ahead of customers and all those kinds of things. But they said, look, don't do it here. And these guys said, what do you mean don't do it here? They said, don't do it here because you will get such pushback from the Board of Trade and the CME and the other exchanges in New York that it will never get, it will take forever to get done. Do it offshore. So this exchange was really founded by Americans with American customers, actually, unfortunately not many, and run by these guys here. But it was placed in Bermuda because they could get a quick approval there. Well, being the first generally is not always the best thing to do, right? We know that. Somebody else tries it out, and people that come after that learn. The reason that nobody knew about this is, number one, it was so long ago. It's 33 years ago, a third of a century ago. And number two, wait, my math's not right. Anyway, it's a long time ago. And the other thing is because it failed. And one of the reasons it failed is that they tried to be a little bit too perfect, and they started with gold. And one of the secrets to starting new products is that you want to start new products in a bull market. People will trade if the price is going up. Unfortunately, this was after gold had reached a peak of 850. On launch day, it had already fallen to 340 and continued down to 290. So this was a bear market, and aside from all the other electronic things, that's one of the reasons that the thing failed. All right. All the other, this exchange, this thing here, okay. There are several other exchanges. So you said Australia before, and you were very close. So this is actually the second fully electronic exchange.
I knew it was down there somewhere.
Okay. How many of you raise sheep? Still a small, okay, it's still not happening in Chicago. So this electronic trading was a solution to 3 of the first exchanges that were electronic. There was a location problem. In New Zealand, they used to trade, they would trade what is sheep? Wool.
Greasy wool countries?
Yes, exactly. Have you traded that?
No, but I
Used to dream about it.
I was offered a job in Sydney when I was in Melbourne, and I knew the contracts they traded
Wow.
on the S&P.
Nice. Okay.
I took the test.
So during the party afterwards, talk to this guy. You can learn more about this. So the thing is that there were 7 wool traders, 3 wool centers, and everybody wanted it to be where they were. And that's always the case. And it turns out, and they realized that they couldn't satisfy everybody, but so they decided to put a problem. They also did a smart thing, which was they partnered with 10 bankers. So they actually listed both physical commodities and financial commodities at the same time. And so 1985 was the New Zealand Futures Exchange, which was the first successful one. We also, OM. So Olaf Stenhammer was a New Jersey options guy at one time. And he, in fact, around the time that the CBOE got going, he really wanted to make an electronic options exchange. CBOE couldn't do it because they had the same legacy problems that all the other exchanges had, which was that they were owned by the members, and the members knew how to make a living, yelling and screaming on floors, and they did not want to give that up to go upstairs. So even though CBOE had the legacy problems, Olaf didn't, and so he moved back to Sweden, and basically he did a very smart thing. So he set up this electronic platform. He did some other things to pay the bills while he was building this. He sold it essentially to Enskilde and Wallenberg Group. He kept only 10% of the shares for himself, but it never would have been the success it was without him getting that backing. So he, didn't need to get greedy to do well. And the other thing is that this exchange was profitable in 1 year, which is pretty amazing. Okay, so SOFEX and DTB. So how many of you have never heard of SOFEX? Raise your hand. How many of you have never heard of DTB? Raise your hand. How many of you have never heard of Eurex? Raise your hand. Eurex is those 2 exchanges when they merged, the Swiss exchange and the German exchange. So the deal is that both of these places had a similar problem that the wool guys did. In the case of Switzerland, there were 3 big Swiss stock exchanges. Each one of them wanted derivatives traded on their floor. Solution to have a electronic exchange. Deutsche Börse was electronic at its founding, again, because there were the founding banks. There were 5 founding banks, banks were in 5 cities. And again, this solution worked. And in fact, these guys bought these guys' electronic trading system. And they, the other thing is that, in fact, I'll show you this. There's a surprise coming in a second. All right, what do you notice about this chart? Anything jump out? How many American exchanges are on there? These are the first electronic exchanges. All right, pretty much 0. And in fact, not only are there no American exchanges, but most of these are brand new. There's a few. Tokyo Grain Exchange, which existed before electronic trading, they converted. The Australian Stock Exchange, which existed already. You're from Melbourne originally?
No.
Oh, but you live there.
Yeah.
They existed. They did not start out electronic in the beginning, and the Tokyo Commodity Exchange, but all the rest started out. In fact, China which started exchanges in the early 1990s, every exchange, from the get-go, every single exchange in China was electronic. And so most of what was going on with this was happening away from the US. Now, why did the US take so long? And why did the legacy exchanges take so long to do this? Well, like I said before, they were owned by the members. And so they did what the members wanted. The members did not want electronic trading. And that's really what happened. I was going to sing the Amy Winehouse song, but I'll save that for later afterwards. So, Life. So somebody had guessed that Life was the first electronic. What Life did, they did the same thing that a bunch of other exchanges did. They felt, okay, we need to have trading at night so Asia can trade on our exchange. And so what Life did, and we need to get into this electronic thing, so Life, CBOT, CME, NYMEX, a number of exchanges built these after-hours systems to allow for trading after hours. The Life, once they got going, at the time this event happens, they are the biggest futures exchange in Europe, and they are the third biggest in the US after CME, CBOT and CME. Their biggest product was the German government bond. And the reason that they were able to do that is because at the time they started with that product, Germany could not trade. They did not have a futures industry because the laws considered futures to be gambling, and therefore no contracts could be honored or could be trusted. So the Life got hugely, this became their basic product, the best product they had. This Frankfurt-based DTB that later became part of Eurex, that merged to become Eurex, it was totally electronic from the beginning. It was cheaper, it was more transparent. You could see the book. It wasn't just like you'd call on the phone and find out, what the best bid and ask was, which might not even be there by the time you trade. It did something that was impossible. And in fact, let me show you the chart, because this is the chart that scared everybody to death in Chicago. This is Life, the little boxes. 2 years after Life starts the Bund, the German government bond, DTB starts it as well. And you can see for a while they're kind of going hand in hand, and they get about a 50% almost market share, and they're sort of doing fine. But the advantage of having that transparency, having the cost, and a number of other things allowed something to happen that never happens in futures contracts. You can see that starting in 1997, they start to get really close, and in 2 years, Life is dead, the contract is totally gone, and DTB gets 100% market share. So the thing that never happens in futures generally is that futures contracts are what I call liquidity-driven monopolies. In other words, each exchange has this portfolio of products, and that's the only place you can trade. On the day that the CME and the CBOT merged, and you were still there then, is that correct?
Just CBOT.
CBOT, right. And I won't tell anybody that. So on the day they merged, this is roughly correct, the CBOT had about 35 futures contracts, the CME had about 70. Guess how many they had in common? How many active contracts they had in common?
0.
That's a great guess. In terms of active contracts, it was 0. There was an ethanol contract that both of them were trading and trying to get some business in, but that's always what happens. So the idea was that if you're an exchange, you build up liquidity, nobody is ever going to go to another exchange that starts the product. This scared everybody to death because it told them that these electronic exchanges have advantages that could cause them to be able to take market share away from the initial exchange. Okay, so the other thing that I want to, the other implication of this, which was huge, and which was disturbing to Jeff, I think, to some extent back then, when he worked for this, the CBOT, is nobody, 15 years ago, if anybody had told you that the CME would one day absorb, buy the CBOT, you wouldn't have believed it. I mean, it was just something unthinkable. And why did that happen? Why did it end up that this little scrappy upstart was able to essentially exceed in volume its competitor, the CBOT, and eventually take it over? Well, there's actually 3 reasons for this, but I want to just focus on one which is very important, which was how they reacted to electronic trading. No, those are the 3 reasons. Okay, so I should first say that CME did one thing. They created something called Globex, and they stuck with it the whole time. And they had a strategy for that. What did the CBOT do? Well, they started, Jeff did not cause this at all. They started, actually, in terms of having this after hours, they didn't even want an electronic system. They actually it's like a factory floor. They had another shift, so they put people on trading on the floor at night. That didn't work very well. Then they unveiled something that's called Aurora after the Roman goddess of dawn, but she didn't help that much. Then they joined the CME in Globex, and then they decided, okay, we're going to get out of Globex, and they started something called Project A. And then they dropped Project A and they joined with Eurex. And then they dropped Eurex for a good reason, and they used the platform with Life. So while the CME was sticking with one strategy, they were going back and forth and back and forth. And the reason had to do with, well, in fact, before I give you the reason, this is what Aurora looked like. Do you remember that? The Board of Trade, they wanted, if they were going to have electronic trading, they wanted it to look as much like pit trading as possible. So these are different people standing in the pit. And so when you would go in to trade, just be happy that that didn't win. I shouldn't say that. I mean, maybe it's wonderful and I don't understand it, but it's it was, again, it had to do with this, the fact that the members owned the exchange. So the difference between the Board of Trade and the Merc were that these 2 guys, Leo Melamed and Jack Sander, worked, even though they fought a lot, they worked together. There was this consistent plan for electronic trading. I mean, together, these guys were leading the exchange when the 2 biggest contracts, Eurodollars and the S&P 500, were started. Notice that Jack was chairman for 13 years. Leo was kind of the secret chairman for 50 years, or whatever period of time that is, because he was always in the background and was always involved in everything. While they were doing this, so Pat Arbor, who you worked for directly.
No, not directly.
Oh, you worked for indirectly.
Yeah.
Okay. Pat had 6 years continuously, which is half of what Jack Sander had. The point is that there was always these rotations back and forth between chairmen. And you went from Pat Arbor, who was, I think he was somewhat friendly towards electronic trading. You get David Brennan, who was pretty much a total Luddite, really didn't want, and he was representing the feelings of the people that voted him in. He only served 1 term, but because of I think because of that strategy, that is why this event, which was, this could have been a huge, huge event. I don't know if you guys remember this, but in 2003, the CBOT decides to get out of the thing with Eurex. There's a falling out between the 2 exchanges. Eurex comes back and announces, okay, well, you don't have to use our platform anymore, but we're going to actually come set up a subsidiary in Chicago, and we're going to compete directly with your products with our cool electronic trading platform. And and to compete with the CME, it was more the Board of Trade initially, but it became the CME as well. BOTC is the clearing entity for the CBOT, and Eurex approached them and said, hey, we're coming in, we're going to be competing with the CBOT, and we'd like you to be our clearing entity. And it was a risky thing for BOTC to do, but I don't know for sure what really went on in the discussions, but BOTC knew that if Eurex was successful, its business would all disappear, all of the clearing business, because the CBOT would disappear. And given all that, people were really afraid, and I was working at the CFTC when this happened, people were afraid in Chicago that there would be a repeat of what happened in the case of the German government bond. It didn't happen for a number of reasons, but that was really a big fear. Okay, so what are the takeaways to all of this? I didn't even really talk about technology itself, but technology was this thing in the background that is just taking off, that affects everything that we do, including old iPhones. I want to talk to you about, okay. And the exchanges, the position that exchanges ended up in depended upon how they managed that technology. There were the member-owned exchanges in general had trouble, and so they were always behind. One of them disappeared, Matif, the French exchange, disappeared. Life disappeared more or less into a much smaller thing than it was before. It was bought by Eurex. By Euronext. And then there were a set of exchanges that were true dinosaurs. NYMEX, at the time electronic exchanges are expanding like crazy, what's NYMEX doing? NYMEX is setting up floor-based exchanges in Ireland, in London, and the plan was to do one in Singapore as well. It was, again, this thing of members being in denial about what this whole thing really meant. The fact that, despite all of that, and the fact that there was that denial that was taking place, the CME managed to manage this challenge well and ended up on top. Now, will the CME always be on top? No. Okay, and you have tell me why. Okay, exactly. I mean, nobody would have imagined that the Board of Trade would have disappeared into the CME.
I disagree, though. I think they will remain on top.
Forever.
Well,
Like
forever's a long time.
I hope so.
Okay, well, so like for 1,000 years.
Well, I wouldn't go that far. I don't know if it'll be as long as.
There may not be humans here.
Well, now we're getting to the crux of the talk, because this is what we want to think about. What would be the next thing that you would introduce? So just electronic trading per se has come to be the way it is. Now, are they going to go to quantum trading or something like that?
So, please say something about
Who,
that.
me?
No, him. Well,
No,
you
ask
too.
him, because he doesn't want to. Yeah, I think the idea is that people are self-satisfied. And when you go to the talks, I've been in this a little longer, and when I started out, I was the little runner that they threw on the floor because they owned the exchange. Then I came back later after medical school, and oh yeah, we have to look into this too. But we are important because we have 30 years in the pits. Now you don't hear people bragging about that anymore. They're ashamed of it, and they're trying to find a way to make a living without invoking that. And you guys are here, which is great. This is wonderful news.
So, you guys meaning?
Us, all of us.
Right. So the bottom line to this, I don't really know where things are going. I mean, we know, how many of you are algorithmic traders? Okay, it's just a small number. So, and there's some limit on speed. You know, we'll get to the point where you can't afford anything beyond a certain, expensive by some of your standards, I'm sure. But I'm not a really active trader. So I don't know where this is going. So what I want, my purpose today was really to give you a grounding in what's happened before and let you figure out where the future was. So since I'm out of time, I do have a secret, but I don't have any more time to tell you. So I think that's it. What is there? There's another speaker now, or what do we do?
Just Q&A.
Oh, so okay, so let's do Q&A. I may not have many. I have lots of Qs. I don't have any As, but
Well, I mean, certainly you have an opinion of where things are going. This is your expertise. Do you think it'll be electronic trading going forward? Will options eventually go 100% electronic? Well,
the reason I mean, I will say my belief is absolutely, but I believe that 6 years ago, and options have hung on. I mean, the two things, if you go back 6 or so years, two things were hanging on, ags and options. And the ags are gone now, or they will be gone very soon. And the options, everybody, I mean, you guys are some of your options traders, and everybody tells me options are more complicated and they haven't you know, if you want to do any kind of complex strategy, you really have to do it on the floor. I can't believe that will always be the case. I don't know when they're going to pull the plug on the option stuff. And I don't even know, so I don't know. I don't have an answer for that. My belief is it's absolutely going out, certainly within the next 1,000 years. Any other questions or comments?
Well, what does our friend from Options City feel about this?
I didn't write a book on it.
Sure.
I think, as someone that works at an option-centric software platform, I think, we're trying to position ourselves and our company towards more migration to electronic trading, although we, still support and offer a kind of hybrid floor, tablet, as well as electronic auto execution platform. I'm in sales at Option City, in case you can tell. I don't know. I think it's natural that it would go electronic. I think, the Eurodollar pit is where large trades go in options. That's why it says the floor's still open. Although, for complex strategies on a system like ours, you can have pretty good visibility of what the components of the strategy are, what a fair value for that strategy is. Using our technology or maybe even some others. So I don't think that would be a reason why it wouldn't go. I think it's just a slower thing. When you have a lot of people that have their livelihood dependent on what they've done for 30 years or whatever in that pit, there's gonna be some resistance, and it's gonna have to be a gradual thing.
Yes.
I'll add, but the views I express are my own and not that of CME Group.
These were not my views either.
So,
they were actually
when the
CME's views.
Board of Trade first went to what we call the ACE platform, the EUROS platform, in 2000.
Okay.
About a year later, I think the first year electronic volumes was 20% already. So within a year, the bond volume, treasury volume
Wow.
had gone to about 20%. It was pretty quick. Well, Globex had already been established as well. Everyone said, okay, well, when are you turning off the lights? 15 years ago. So,
Right.
And here we are. We're going
Right.
to turn off some of the lights.
Right.
So I think you've got a long life to go until the percentages get very high.
So
before
what
that
is your
decision
unofficial prediction? How many years?
I don't know. I would have said, I would have never said 15 years in 2000.
Right,
But
right.
like everyone else, too.
Right.
This might be thinking outside the box, but what about if X number of years from now we've gone so electronic that people want to go back to open outcry? The world's everything you can trade anywhere. All the markets are all connected. You can arbitrage left and right, and there's just too much to where it's hard to even get filled. And
So
people
that-
say, I'm just saying, I'm posing a hypothetical. What if we become so electronic, everyone's equal in speeds, that it's just, let's just go back to the floor.
Well, so I have an absolute reaction to that, which is back then, you could not see the book. In other words, what would happen is you'd call down to the floor, you'd find out what the bid and ask was, you'd say you wanted to buy, you wanted to sell. By the time they got the order into the pit, you may or may not get it. And the reason that this guy from Merrill Lynch was upset is because they felt most of the time it moved away from them. When you have, in an electronic environment, I know stuff does disappear, but now it's a matter of, in the case of stocks, it's a matter of pennies, single pennies that disappear. So I just can't imagine, I mean, a floor would be more expensive, number one, and secondly, it would be much less appealing from the point of view of keeping your trading costs low. So personally, and the other thing is that, assuming that everybody got rid of their smartphones at the same time, I don't know. I mean, I love thinking out of the box, but I don't believe that one. Any other? But I love that you said it.
I don't want to take over your entire seminar, but what's your view on for example, the high frequency trading? So we talk about front running in an open outcry environment. Now we're finding out in the electronic environment with disparate matching engines that people are allowed to basically front run the orders that electronic trading was supposed to prevent from happening.
Okay. So I love Michael Lewis. He's a really good writer. And I love the baseball movie, and I love the book, and in fact, everything I've read by him is really good. I think I think that he's misusing that term front running, and because even if it was front running, we're really talking about pennies. We're talking about cases where, so for individual traders, it absolutely does not affect them. It's true that big institutions that were, in fact, this Brad Katsuyama, he was used to being able to look at what was out there at various exchanges, stock exchanges, and he saw there were, 300 here, 1,000 there, etc., and he would send out all his orders and he would get them all. And then he started to find out that, well, what would happen is he would get one place, but then the price would change on him in all the other places. And that does not have to be electronic trading. It's where people are watching for stuff and trying and making guesses. It's kind of like head fakes. I mean, in basketball, do you think we should ban head fakes? I mean, to some extent, it's kind of like that. I mean, people are playing those kinds of games. So I think this whole thing has been great for individual traders. I think even if some of that stuff is going on, I think it's great. And I guess I'm not convinced yet that any of that was truly front running. I don't know if you have a.
I don't trade equities, I don't know, but
Okay.
I would imagine if you have disparate matching engines, you create a problem. If you don't have a central order book for individual stocks, then you always open up the possibility that people can take advantage of receiving information from the different central matching engine. So I can see where people could abuse that. It's like watching a hand signal come into the pit and front running an order. I mean, if you can see it, then you can
Right.
get ahead of the trade.
Right. So one advantage most of you are trading futures, I think, and one advantage that you have is that, like this monopoly thing I talked about before, there is generally a single exchange that's trading the product that you're looking for. So that one of the issues in the stock market is this really stupid fragmentation that we've got. Do you know how many different venues you can trade stocks on?
More than one.
It's if you take, I don't remember the numbers exactly, I think the number of exchanges, official exchanges, is something like 15 or so, and then there's something like 86 what they call ATSs, alternate trading systems. So there are over 100 different venues that your orders can go to in the stock market, and it is just unwieldy. It's something. The SEC was trying to create a good thing. It was trying to create competition, and there is more competition in the stock market in terms of for exchange fees, but it's not. So it's much worse there. You're in a better place, I think.
Being in futures.
Being in futures, yeah, or being here in this room too.
I have a question. I went to a seminar at the University of Chicago where they were discussing just high-speed trading. And their point was that A, it isn't turning out to be that profitable. And B, it's very risky to put in this big investment to be competitive there because once you lose your edge, you got nothing. Do you have information about the profitability of it? Because these hedge funds don't really have that good a record.
Well, so the prop trading firms that have been using, that have high-frequency trading systems, there are a bunch of them that have disappeared. And in the beginning, it's just like new markets are inefficient, and it's possible to make money. And people from the CME used to love to go to Cymex or to Australia or to a place where a new market was getting created because they knew that it was inefficient enough that they could make a reasonable income. In this case, I don't think that that's I think it's gone. I mean, some people will continue to have high-frequency trading, but you're right, it's so expensive, and because there's so much competition from others, I wouldn't suggest that any of you spend very much money on this. Well, let me just ask this. There were 3 of you, I think, that did high-frequency trading right now. So,
It's not it's algorithmic and high frequency trading. It's not necessarily.
oh, I said algorithmic trading.
That's correct.
Okay, I did. Thank you. So, yeah, in fact, I can't believe that individual investors would be doing high-frequency trading. It's way too expensive. Okay, one more if anybody. All right, well, if not, thank you very much, and go party over there and talk to each other.